Oh,
Die temperatuur is gewoon oké. Ja, dat is grijs knopje. Ja. Hello guys, can you hear me? Sorry. Okay, good. No, sorry, I had you on mute for a reason. Sorry for being late. I had to unscrew myself a few times on a specific trade, which is still chasing me from this afternoon. So what happened was with me earlier was that I was filled with a long earlier in the day, and then a stop got hit, but I forgot to cancel an order. So basically what I've been doing today was recuperating it, and it was a pretty big loss, which I had to fix basically, and it worked out fine, which is fine. So yeah, it's getting interesting for me now at the moment since we're sweeping the previous day high, and the things that we wanted to cover. I think you guys wanted to see how my thought process was working, what I've been doing before or many times before, and what tools I use, right? So I don't have much to say in that regard. The only tools I really use is the FX4 tool from 2 degrees. And the only thing it does for me is show me the previous day high, previous day low, and premium and discount. And then other than that, I have average daily range levels, which I take into account, which was the reason why I was short in London. And since you guys know, I think, how I draw those lines out every day, the high was created in the London session again with a short opportunity. It was tough to hold. I was short up to the Asia low, but then I had a few runners left and I closed them right here. And the reason why I accidentally got filled on my longs was because I forgot to take out my coverage orders, which were located around here. So when this drop down happened, I got filled on my buy orders while the price continued to move down, and then a stop got hit. You know, I was still bullish overall on the market. It didn't really matter. If I would have known, I would have just left it on and then gotten out here. But I had taken the stop loss, so I had to recuperate all that from down here. So when I came back, I told you guys also in the Discord to long this, I think, to go back into where we were at. And it was this fair value gap here where I thought we would retrace back, and then I continued to long. And for the entire day, I've been scooping up shorts and scooping up longs, scooping up shorts, scooping up longs. And the last time I went short here at this point here, and then it reversed against me because I honestly didn't think we would go back to the previous day high today, because I had the bias basically that we would head down to a TGIF level, which was down here, or at least on a daily discount. But you know, these people have other things in mind and they want to get up as quick as possible, which is fine. We react to it, and if the setups present themselves, we adjust. So that's perfectly fine on that. Now it will get interesting for me because the reason why I'm drawing these fair value gaps up here is as soon as I get candle closures below them, I will look to trade the opposite side of the trade. So, but by the looks of it, it's not going to happen today. It looks like they want to close it on a high note. Those TGIF levels are fairly simple. You have a weekly candle. That's this candle right here that you see on my chart. It's the power of 3 indicator. I have 2 different time frames overlaid. This is the weekly candle. As you guys know, how I work with each candle closure is that we have an opening price like this. Hold on, let me change the tool. We got an opening price, a manipulation leg down, distribution back up, and then we close up in like the 20% level like this. So this is the anatomy basically of a weekly candle. So you can see how last week or this week we opened up. We had a real tiny manipulation like down. We're going up, 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 up. Who knows how high? Doesn't really matter. But we should be able to retrace back to whatever here. I don't think we're going to make a new low on the day. So most likely we will close up somewhere around in this area above the all-time high that was previously done on NASDAQ. It would be sweet to go back down to here. I keep adjusting these lines. And the reason is because I like to initially swing longs from discounts, which we didn't really get. However, my mind switches as soon as we get a break of structure. And I will show you what that looks like, where I change my tune. So what happened on NASDAQ, and ES has a different profile, and I'll just name this one market structure shift here. You see, once we break out above with a candle, the only thing I look for is very simply a fair value gap to buy from. And the drawn liquidity is then up here. If you can go back to, I'm not sure if I did it in the chat or in the market chat or in the pro traders chat. But anyway, either one of them, I told you guys that we will be trading up to this zone approximately. Hold on 1 second. I opened the short at the previous day high, so let me see if I can cover that up. These are the type of reversals I look for. I'm not saying that this is going to be the top, but I love to look for these sweeps. This is a breakaway gap, so there's a possibility that we could trade back into this and do a continuation move up. And the reason why I'm saying that is because we did not make a new higher high on that candle. So before we go down, I expect them to not give the opportunity to short. Hold on a second. Take some contracts off here. Okay. All right. We'll leave that on. Wat zal ik dan helemaal sluiten of één laten gewoon? Want daar moet wel naar de discount, denk ik.
Ja, ik heb hier nog geschreven.
All right, you're hearing my partner talking on the background, by the way. We trade together.
Hi guys.
And we like to discuss. He does mostly stocks and those kind of things. So it's like a team, and it's nice to have someone next to me doing the same damn thing. So yeah, and we discuss strategies and those kind of things. And I teach him the ICT system as well, because he trades mostly on the triggers. And we're trying to find strategies now, how we can mash them two together and make things a little easier for you guys in the end. But that's something for later. So if you're hearing someone talking in the background or me, that's him. So I'm not sitting here by myself today. Anyways, so I'm going to be waiting for the next minute candle. This is a 5-minute chart, but if you go on a 1-minute chart, you'll see it much quicker. And the reason why I went short, I left it on the 5-minute because, like, for me, it doesn't really matter. I see the same things happening on the 1-minute and on the 5-minute chart. And we keep looking for discounts and premiums to look for. And on the market structure shifts, you see what happened here. You know, we break back above the previous day high. As soon as we break back below and we create a bearish fair value gap, you can look at, but there's also a breaker there, but that's something for later. I will post some study materials in that regard. And the reason why I'm not calling or telling you guys to do anything with it at the moment, because they can violently reverse this thing in a heartbeat. The only thing we have to take into account that in 8 minutes we've got the 2 p.m. opening, and I'm being very careful with the shorts. And the reason is because the day opened actually with a lower opening compared to yesterday, which you also hear me talking about often, saying I am bullish on a day when I see a lower opening. And we did not get a higher opening. We opened up in a gap down, and the first thing where my attention goes to is what I told you guys, is look for the mid of the gap. It took the entire fucking day to fill the entire gap, but that doesn't matter. It got filled in the end. And the theory works. And the question is like, when do you join the party? And, there is no answer to that, unfortunately. You need to cut the pie into pieces unless you're a swing trader where you think, they're going to continue up to those targets, what I mentioned on NDX. You just hit that bat and you keep hitting it until it doesn't work anymore. And that's the same thing with me. How I was trying to short going to those targets mentioned. I keep doing it until it doesn't work. So, and I'm covering the last short that I have now because I do not like that we're trading back outside of this fair value gap and we're not getting really a continuation move down on this. And it can, but if we were going to go short, we would want to do it from here. And it's very simple because we would draw an OTE from this high to this low here. And OTE with text. This is also your short zone right here. So we'll just wait and see how we will react to it. Now, I don't like initiating longs from this area anyways. And the reason is because we're in the biggest and the highest premium we've ever been. We're at all-time highs. I'm not ever going to join this party for a long from these positions. I rather take a loss on the short side, and I will short setups that are there, but the upside potential is just very limited. Sure, it can go up 100 points, but I'll have a stop to take me out for it. Now, I want to point out one little thing on the 15-minute chart. The reason why I think we still have some more upside left. Okay, sure, we did take out these highs from here. This was the previous all-time high, but we ticked above. But typically, when a new candle opens up, you want them to take out this one right here for a big reversal. So I'm treating any discount they offer me from here on as a long. So what is discount? Okay, if we give back half of this move already, we can also draw optimal trade entries from this low to this high right here. And let me make this dark. Dark charts. OTE text black. Okay. So the mid of this entire move is right here. Okay. What can we do in that to look for fair value gaps that have not been tested? Okay. So we have one right here. See one right here. Did we trade into it? We'll zoom in. Yes, we did. It's been tested. Other than that, we don't have any. What else can we use where confluence is? I look for down close candles like this one, because this is basically an order block. You can draw a line on top of here. If they get to close underneath here, that could mean or spell trouble that we would continue lower. Now, for me, there's enough range for me to be able to short that as well. But that's why I drop down to the lower time frames to see if we can use that as a target to work towards too. But let's also look on an hourly chart to see what it's telling us and if we're seeing anything in particular that could have our interest. I don't see anything directly on this, except for that we're currently heavily rejecting this area right here. So we'll drop down to 5-minute chart to see what else does work, what we can see. So notice how I drew this fair value gap right here on the 5-minute chart. And we're not getting that candle closure underneath here yet. However, this was a market structure shift on the 5-minute. Okay. This candle was the one that confirmed it. So what we're going to be doing is I'm going to change this to the city. It's a bullish fair value gap, but I'm going to change it to a bearish one because if I wanted to short it, it's a place where I would look to enter from. However, if you're really bullish and you think you can reach up to those new highs, this is the place where you would typically enter and your stop would be placed right here. So you have these 3 candles 1, 2, 3. The fair value gap in the middle. See that? Your entry, technically, the trade would look like this. Okay. And let's go for 2 to 1. Okay. We're at all-time high, so I don't know. You know, for all I know, they can go up to 22,000 today, but yeah, there are ways to project based on what you see here. So you can profit like here and do standard deviations, I think. Let me see if I have it here. Projections. And we'll swap this out. And we'll see if we can get 2.5, and if it matches up to 2 to 1. Yep, we could reach here, maybe. So this would be your target right here. Let's see if they give it to us. We'll go to a 1 minute chart to see if we can see any other nice reversals occurring. I'm going to take the candles off so you know what I'm talking about. So far it's working out fine. Notice how this fair value gap is being disrespected already in that sense. You want it to reject below the mid of it already, and it's going too far in my opinion. So I'm not even taking that into account because we're aligning ourselves with the higher time frame like I told you, right? So I'm taking that off already. Here we go. Okay, now this is also being disrespected. But if you want it to be short and aggressive, this is the place where you would enter your short. But I don't think it's a good idea. But let's see. You know, the pressure is to go up. Hold on 1 sec. Over the kwartier is not here. Anyway, I'll move this over so we'll see the price action on the chart itself. Remember the target was up here. So your entry technically would have been here. Your drawdown would have been this. Okay, so let's say if you wanted to take $700 or $750 risk on this and to earn 1,500, it's a 2 to 5. Let's make it a 2. I make this 500 bucks, for example. It would be whatever. 50. The O that you're hearing is when we're reaching the previous day high. It's a sound alert that I use. You guys have any questions? ES making highs versus NASDAQ, does that affect your buys here? Well, they're both trading at all-time highs, right? ES is in a league of its own, and it's fine. I don't pay attention to it because, like, if you look, the thing is, sure, you can take that into account. But I haven't figured out for myself how that's going to benefit my trading when I'm trading the NASDAQ. Because it's only creating noise and preventing me of taking a trade because I think something should do something while I should be very careful in creating that bias. I mean, sure, you should predict what should happen. Yeah, that's basically it. Odds of a 20% retrace. It will happen, but the question is, are they going to do it today or will they do it tomorrow or Monday? So it will happen. It's just not maybe in the cards for this session. I personally do like the idea of us dropping down now, but I don't know. I'm not. I'm not a big fan of taking any longs here anymore. So, especially not on a Friday. It's a setup that usually either happens on a Thursday or on a Friday or on a Monday if it didn't occur on the previous days. Now, you have to be careful with that. It is possible that they can close the Friday on a high note, which is perfectly fine. We're at the end of the year. We've just had the election and all that other stuff. So, people are trying to pick tops, and why not, make it tough for them? But then again, you can also get like a group of people trying to long this stuff now, and where they will flush them out and scare them out. So, and that 20% retracement is something that is completely healthy. There's nothing wrong with it, and the volatility is here, and it's fine. And if you're aware of those potential dangers, you can take that into account. Sure, it will limit you in what you are doing in your trading, but it will also filter out the bad trades of getting stuck, and keeps you very nimble in what is presented in front of you at the moment. So notice how we're still respecting this fair value gap. What I do not like is we're getting body closures underneath the mid. However, we are making higher highs, higher lows, and it is respecting this little order block right here. So that's good. So if you stick to your plan, your long would have still been valid. And this would have been your order block right here. Let's see if I can make this a little bigger. This is not the case anymore. What was it? 161. Oh, hold on. Okay, sorry. Captain was calling me for some reason, so I had to tell him that I was on stage. Let's see. Odds of a 20% retrace weekly close on Sunday Eve. Could be. They could do it on Monday, but I don't know. We'll see what they will offer you. Like, you will want to see a displacement. Like, for a short, this is not what you want to see. You really want to see them make a new low and create a displacement over that low, and they're not doing that. Sure, they're doing that here in that sense, but is that big enough for you to be able to trade back to that TGIF level? No, it's not at the moment. So let me have a look. All right. So we've got this bearish fair value gap that we're still fighting with. Notice that the bodies are remaining underneath it and we're just wicking through it, which, again, this is like one of those cases where the wicks do the damage and the bodies tell the stories. And, choose your battle. What are you going to be doing? Going long in like a super premium, or are you going to be accumulating your shorts for a potential mean reversion trade back down? Well, I'll do the latter. The weekly close is at when the futures markets close, okay? So even though like we can close SPX and NDX at 4 p.m. at this at their highs, they can do that retrace in the last hour when the cash has been closed, and they will dump it down. So that is a possibility. Keep that in mind. Let's see. What else did you guys wanted me to cover that was not clear for you? Someone type optimizes typing. When you put out the midnight open diagrams, you use the 1/3 ADR to draw the fib, then just place OTE boxes, right? Do you have a more automated process? No, I do it all by hand. I have not attempted to optimize it in that sense or automate it. It's 2 minutes work, you know. I'm not a programmer, so and there's context to it. I keep track of the new day opening gaps and the new week opening gaps because the Asia models that I trade is I look for those sweeps to occur. The dotted lines that you see here, by the way, are the Asia high and the Asia low.
Oh.
And they get drawn by that tool. So as soon as I see the acceptance back in that range, I will look for fair value gaps that present themselves to short from. So like, for example, when we swept the PDH here, I added to the short in this fair value gap right here because we got presented to it during the London cash, right? So they dumped it in and they took out that high again and I dropped it back down to the Asia low. And I wanted to go on lower, but then, you know, they chopped around and they fucked around for hours. And then I pulled the plug here, I covered, and well, I left the buy order down here, but that's how it just happens to happen sometimes. Now, in regards to that high, look, I'm not aiming, since we're at all-time highs, I'm not going to be aiming for this target right here, by the way. I will always aim for what is here. And the reason is because I'm not sure how aggressive they're going to go up and how aggressive they're going to come back down. So there's like a possibility that you're going to miss your fill, right? So they'll do something like that and then maybe dump it down, or you know they'll rock it up. But like the chances of you having a continuation move up on all-time highs, I don't know about that. I'm not a big fan of that stuff. What I do not like about ES, looking at this on the daily chart at the moment, is how we gapped up. Okay, so who knows, they're going to dump this one still down here, except for yesterday was a very nice lower opening. You see how they gap down, did a manipulation leg down, opened here, and the rest is history. So that was nice, but this was all planned. It didn't matter who was going to win, in my opinion. The plan was always to buy after the results had been known. I was just hoping to have a larger dip in a way. So, all right, let's have a look here. Okay, see how we're not getting body closures above that mid, which is good. However, we are being supported by fair value gaps. And there's a good example, again, why we should continue to hold this trade on. It's a little tiny fair value gap here. We'll let the body tell us what it's going to happen, what it's going to do. Notice that how we're getting the lower opening here? Could spell something for later. If they continue to flush down and they leave that as an imbalance, it's a target we can work towards later. But in theory, we should continue to go up. Still, there's nothing wrong holding this trade for now. That long is still valid. Now, it's the same, that same order block that I drew here This is also an order block again, right here. So let's watch to see if we're going to be able to hold this one right here. What is this, in 1 minute? Yeah. So we keep hitting that back. Look, you can treat these wicks also as potential fair value gaps. Let me have a quick look to see if you guys have any further questions. Let's have a look on ES in the meantime as well. Yeah, what's there to say? I mean, like if you're long, just keep holding and hold your nose like you would do when you're swimming underwater. If my bias right now is up, what would you do to set a price target? Well, that's what I showed you just now, what happened with NASDAQ right here, where I just take this consolidation right here, this pullback, and I draw a projection, a standard deviation projection at all-time highs. And that's where I typically would target like a 2 standard deviation or a 2.5 standard deviation based on that move that is there. So that's how I do my projections at all-time highs. And sometimes, most of the time, I'm just lazy in trying to do that. So I'll just wait for a pullback to occur where I have a reference or equal high where I can work towards too, which we have here. So that's the reason why I said, you know, if I was to take any longs, I would just take it to here, right here, because you get plenty of points, right? So I think I drew it out as well. Like if you would long it here and you leave your stop right here, and you have a 2.5 risk reward ratio in play. Well, you know, even this is already how many points? This is already 10, and to get up to that high is 20 points. So that's enough for me. Another tip, what you could do is draw these boxes of 20 points. When you see downside potential for 20 points or upside potential for 20 points for wherever you are, plan something around it to reach it, right? So in this case right here, like if you would have longed here to trade back to that fair value gap, it would have been fine. You got your 20 points. You do that 3 times a day. Well, you can do the math. What time do you look for daily 20% wick creation? Only on bullish when there's no, like when the body's at the top of its thing. But it works on all candles, right? So let's see here. For mean reversions, you can always look back into it. So like, let's just pick a random candle. They will always go back to the 20, 30% or the mid of it, 50% retracement. Okay, so let's have a look at this one right here. GIF. You see how this candle right here, it closed between the 20 and 30% range. See that? This one's bearish, so we'll need to do it the opposite direction. But you see how they close the candle near the 20, 30% range. Okay, this one is a bullish one. They close it near the 20 or 30% range again. And for continuation moves, you wanted to see remain in this little box right here. Okay. So this one had a big wick, but that's fine. but it closed above it. So it's a sign for you to continue to look for continuation move upside. Yeah? So it's already like telling you to like look for potentials to go up. And the reason why, if they don't align, most of the time there's a higher time frame candle at play. So that's when you get the discrepancies, and that's when people get what do you call that? Confused and messed up. Okay. Let's have a look. See what's happening here. Don't count on it. You'll get a setup. You know, the thing is that like for now, for today, it's going to be a bit difficult for us to figure out for the week what's going to happen. But if you look on what the daily range has been, which has been this, if they can just park it here, right? TGIF. So it can either be a weekly or a daily chart. So if NASDAQ closes near 21,236, it's fine. And the one that I drew was for the weekly. So, but for the daily, it's there. It's right here. See that? So if they park it here, it's fine. It's nothing crazy about it. So that's the Matryoshka doll that I post sometimes, where the fractal part is sometimes in conflict with the higher time frame. But you can see what happened the day prior, and why we should have just continued to look for longs today was because they closed above that quadrant, right? So now for the week, we will retrace them back most likely on Sunday or on Monday, maybe today, but we'll see if we can get a better setup for it. Like I said, you know, it really needs to close down here with a displacement and a fair value gap below it for us to change our tune to go down. Unless you're short here and you want to hold it, but you know, where would your stop be? It needs to be on top of this high right here. Is that a risk you're willing to take? I don't know. I'm not going to be picking tops. I'd rather wait for the displacement. And going long is not something that is, let me put it this way. Your risk reward, it's better to go to the downside. However, you don't know how far they can go and squeeze this thing up. So you're playing with fire. You might as well wait for it. Like, look what happened. You know, these reversals, they look like this. You get a mechanical move up, a blow off top. This is what a blow off top looks like in all time frames. This is a 1 minute chart, but even on a daily, a blow off top looks like that. Okay, so it's like the middle finger pattern. So that's why I was drawing those fair value gaps, because like you see what happens here. Let me take this by thing off. Okay, you see how this bullish fair value gap becomes inverted, and that's your short. But if you see this happening, where like you know where they're really pushing that high. So for example, let's say we get this pattern emerging from this when they take out that high. So you would want to see like this, and then they would create something like that, you know. But we're not seeing that. So, and I'm seeing equal highs. So I still have to go with my thesis that we're going to go for some more upside. And I can't tell you in the last hour or when they're going to do it or they're doing after the close. The only thing I know is that at 50 and at 10 past, between that time, there's going to be an algo which is going to take out liquidity every hour. And it can happen now, it can happen in 30 minutes, and you know, but you won't know. All right, Any other questions? It starts at 50 and it ends at 10. The macro runs for 20 minutes. Would waiting until the hour candle starts disrespecting the green candle to be best time to look for shorts? Right now, ES, London was the last time green bar was disrespected. Look, I keep it very simple, and you don't do it on a 1 minute chart, please, because it will get you confused. I use a 15-minute or a 5-minute chart to look for change of characters, unless you really are nimble in looking or knowing what to look for. Look, whenever you have like a close underneath a previous wick, that's when you can look the opposite direction. So, for example, on the 15-minute chart, we had this candle right here, right? This one. Okay, but let's drop down to the 5 minutes. We'll be able to see it a little better. When is your change of character? Well, you know, I know what to look for specifically on the 1 minute and on the 15-second chart for these things. So, but I think it's best for you guys to like first understand what you see on these other time frames. Notice as soon as we start closing underneath here, you get a change of character. Okay, it's either the opening or the close. Okay, so let's drop down to the 1 minute and see what that looks like.
Oh.
Here we go. See, so we get one giant candle taking out all the stops. And then on the 1 minute, this is what I like to look for, is the displacements happening. Notice how we're closing underneath it, and this is where I look for the shorts. So I'm not picking this stop right here. I actually have, I think 5 minutes. 10 minutes. See, this is a macro that happens. So this runs at midnight 50, and it finishes at 10 past. And I enter actually in the macro. So this is one of those macro shorts that I like to take in the Asia session. See that? This is the macro time where it starts, 50. And it runs till 10 past. See that? So this is your macro window. And that's when they create these entries. And it's the same thing here. Let me see here. 10 past. Here you go. This is the London macro. See that? And guess what here? The clean moves always occur in the macros, you know? So good to know. This is also a macro. But this is the London kill zone end macro. And I got out here at the high because you sometimes you lose oversight. There's not, like typically there's not a lot of volatility that happens. You should close any trade. That was my rule typically to close it at 5 a.m. New York time.
Oh.
So here we go again. This is also a macro. Here you go. So this is the stuff you get. And the next one we have here. So we'll draw a box from 50. the 3 p.m. one I don't like trading that much. So there's like, I think in the final hour there's like 3 or 4 of them. But you know, the expectation. Notice how this trade is still valid that we discussed along. Just let your stop do its work.
Oh.
Let me take this, change this one to a rooster or something like that. All right, any further questions? Okay, I'm already seeing how this is going to get exhausted. So it's not a long, like if you were long, take it off. Have a look. We should get retesting, be retesting this for value gap right here. I do not like the gaps at all. So like I would feel really uncomfortable holding these longs for further upside. Can we have a look on ES? I'm sure they will close at the highs. I'm not worried about that. But the thing is that like, you know, if you want to get filled in, if you're trading more than a few contracts and you have stops in place, you'll get bad fills. That's also happened to me this morning where I got filled 20 points underneath where my stop order was. And that was the reason why I incurred a pretty heavy loss in that sense that I had to recuperate during the entire day today, which was totally unnecessary. And I will show you how they did that. And it happened like this. I put it in the chat where you can see.
Oh.
So you can see the diamond at the lower end. I got filled way lower. That was at 21,117. We didn't even get down there today. So there's your dog bark. We keep flirting with previous day high. Let's see how this fair value gap is being respected for now. For continuation move up. It's not comfortable, but like, you know, it's doing what it needs to do. I think I lost oversight of the stage. Yeah. Okay. Anyone else have any further questions? I expect this to be taken out still. if we're going to go down, we're not going to go down without taking out this high. We take this one off here. That's the next buy side. What I do is just to keep track of and also to accumulate your longs for a continuation move up for Monday is either the previous day equilibrium or the 20% retracement. Now, I do not know if there's going to be a high on Tuesday. There's a potential that we could, since it's mid-month, that they could start accumulating shorts for month's end. But you know, we have to trade up still with them. So we'll do that. In regards to what happened, let's see, Tuesday, the low that was created here. Actually, last Thursday, on the 31st, they swept it. This was your low. What happened? Someone in the chat explain, what do you see? And what was your clue? Let's put it on replay for a minute. Everything's bearish right here, okay? So the day prior, we sold off. Asia sold off. And what happened? We closed at the lows. I think you always buy these closes. When we close at the low, a lot of time, that is going to be a low for a while, okay? Do you have to buy it there? No. Well, what they did in the overnight, they went back down. They held an order block. If you go on a higher time frame, you will find it. A lot of people were expecting and being bearish, thinking it had to sweep the previous day low, which was right there at the time. Well, first of all, you don't need to be doing that. This is enough to tell you that you should be trading longs back to premium. So even if you were bearish, it's not a place to initiate any short positions. You look for longs, you look for optimal trade entries, you look for new week opening gaps, you look for new day opening gaps. Trade towards that circle that I made. Is it going to be an easy ride? Sure as hell isn't. And you're going to have like 3 different sessions for you to accumulate your longs for it. And there's going to be a lot of manipulation occurring into it, especially if it's the end of the week. So we were also trading at the end of the month. So it's perfectly fine to accept for what it was. They almost traded down, but it didn't quite get there. That's fine. So what happened on the 1st of November? Let's move the goalposts up. And I'm going to put it on a 5-minute chart to make it a little quicker, because you will see cleaner setups from it, and the 1 minute will confuse you. So see this right here? What do you see here? This is your breakaway gap right here. This is your entry to go long. When you see these type of reversals, remember what I've told you guys before with those shark's bites, right? Why? And why was that your long? Plain simple. Because you had this swing right here, and they're going to take out this buy side right here. Okay? That's your primary draw on liquidity. New York opens up. See? Swept. That's your go. Any discount you get, you buy. Double bottom on this same fair value gap. And that was your target. See that? Once we reach that discount or that premium again, you look for your discounts. Optimal trade entry right here. Next day, sure, it happened in Asia. It sucks, but process is the same. Okay, so look. OTE. Look at that. Perfectly touched the optimal trade entry box right here. Okay. Now someone asked me, how do you have your projections ready? Oh, here we go. Extreme target was here. Okay. How did we do it? Let's go to the 15-minute chart, see if we can get that. Remanipulation, reaccumulation. Primary target is this. Broke back above. Look for fair value gaps that are in this zone right here or in discount. And the rest is history. We are where we are right now. It's fine. And now they're in a hurry to get up. And target is already clear. See how they're pushing it up, 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 up. What I said before, that long, still valid. We're about to enter that macro. Taking out those highs right now that I outlined to you. And let's see if we can get that pattern out exactly in that macro box that I outlined to you for your short. When I see these gaps, I scalp sometimes my shorts to them right here. I prefer to see more upside and then trade back down to them. And does that mean we won't trade back down? Sure, we will trade back down to those areas at some point, but that's not for us of concern right now. Now, if this election would have been contested in any way, or would have been won by someone else, or I'm sure we would have taken out those lows first and then continue up. But since it was such a clear victory, and next to that, Wall Street wanted this guy to win, so they were pushing it in every way possible because it's the best for the banks to make money, right? So they don't care about the rest. They've never have, and they never will. They're not in the business of socialism. They're in the business for capitalism. So it's just the way it goes, and they got their way. So they were already positioned for it and pushing that narrative the entire time. You could, like, if you would have turned on Bloomberg, there was not a single moment where they weren't looking back, and the way, you know, you start reviewing things of how it went this season. This is the first time where I was really like starting to pay attention to see how they played that game in the media. And it was, yeah, it was sort of stupid of me that I didn't realize it, how they continued to push it in that direction. I didn't honestly think that they were going to get their way in that sense, but that's just the way it goes, I guess. But the price action was clear which way they wanted to go, so there was no doubt about that. All right, so now we're approaching that macro. Notice how beautifully it's starting to trade into it, taking out those stops of anyone trying to short it, not giving them a chance to get in. And we're going to get to see some wild price action in that box. Don't freak out when you see things dumping all of a sudden. It's perfectly normal. There's nothing wrong with it. It's a game they usually play. In the meantime, before we get into that time window, do you have any questions? Optimize. There's one for free. The guy's name is Fadi. High time frame candle. Here's one. ICT HDF candles. Fadi. There's nothing really that can be done better. It's noisy. The reason why Fadi's you can adjust the colors. It is noisy. The only thing what I like about this one here is that they're showing you the fair value gaps. Okay, so on a multiple time frame. So you can be on a 1 minute chart or a 15-second chart here, and you'll see higher time frame fair value gaps. So like, even though you're on a 15-second chart, and if I see untested fair value gaps on an hourly or on a 4 hour, for example, you can just draw these boxes. This is your draw on liquidity if you wanted to scalp shorts. So even if you wanted to short from here, wait for that sweep to occur, and then trade it back to that fair value gap, for example, right? The problem is that when you're doing these higher time frame fair value gaps, it's going to take a longer time to get there. I don't know if you're going to be able to handle the drawdown, but you'll see. We'll draw to them like now. You can see if we get accepted back in the PDH. Wait for this draw on liquidity to occur and the displacement to occur, and you can short it from a fair value gap that was presented. It was actually already presented here, by the way. I see it here. I missed it on the 15-second chart. That's the reason why I trade the 15-second charts, because a lot of times you will get lined. It goes so fast, but you will get a retest on a 1 minute. Don't worry. Like by the time, a lot of times I'm already out of it. Like this is already like 12, 15 points or something like that I trade off. You see the imbalance, right? That is left behind here on the 15-second chart. This gap, we will get a candle back into it. You can draw OTEs in it and those kind of things. What I really like to have, but no one's able to program it, and people have tried it, are the setups that I trade. So I have like a basic of 5 or 6 different models that I trade. And I mean, I have them drawn out on a piece of paper on my index cards and those kind of things. And with the rules that I have connected to them, unfortunately, it's not programmable in it. I've looked, there are some guys that have tried it, but yeah, in the end, it's very difficult for you to tell these bind script things in TradingView which breakup structure you wanted to take into account or not. And the way I'm drawing it, by the time I don't know. It would be nice if I could show a picture to ChatGPT, for example, saying, hey, program this for me when it does this on these type of setups, and do it. But the problem is that sometimes they will go out of bound, and the wicks will be bigger than what the bodies will be and those kind of things. So you can do it, but it's going to be like rebalancing every single tick. There are some guys that have tried to program those things, but like for me, it's fairly simple. You know, if you're able to program something for me that is going to tell me, oh, all right, I want you to get me into a short right here after we've taken out previous day high, for example, here, or it barely has it like that, to be trading down to this liquidity here. Sure, I would love to have something like that, but there isn't. There's nothing fast enough to be able to do that. Plus the execution. Okay, let's say if it takes a short here, like I'm already like waiting for this shit to happen, right? You need to have like an algo programmed in Python or something like that to ja. Nee, hoeft niet. Hij doet het de volgende keer. Sorry, someone's at the door. So, like, if you program a tool in TradingView for this, how in fuck's name are you going to execute when it alerts you? You need to be on top of it. There's just no way for you to be able to execute it. So you see this happening, you get the alert, and what you have 30 seconds to react to it. Because it will alert you here, the trade up here. It needs to alert you in here. So you'll have a minute for you to look for your entry right here. And technically, what the smart money does is they place their entries here. And they leave their stops right here. And they go for here. Okay? That's it. Yeah. Yeah. Yeah, that's good. But like you have the and honestly, I like the inversion fair value gaps much better for the entries. And let me see, IVF. I think there's an inversion fair value gap from Lux Algos. They have one. Tried it a few times, but yeah, it's just messy as fuck. You know, you look at these breakaway gaps, and sure you can enter it here. Er zitten allemaal kleine vliegjes hier overal in huis. Ja. Ik weet niet waar ze vandaan komen. Fruitvliegjes? Ja, nee, het zijn geen fruitvliegjes. Okay. So, but the fair value gaps that matter, they're very difficult to define. For some reason, at least in TradingView. I don't have TAS, and I will never have TAS. It's not even a program that's allowed to be used here in the Netherlands. So, you know, I'm not even going to bother doing it. You know, I do it by hand now, and it's perfectly fine. But maybe one day I'll hire a programmer to do something like that and create an algo for me. Okay, we're in a macro right now. What I find interesting is that in this macro, we're actually at the lower end of this range. So let's see what they're going to do. I would assume that we're still going to take out this buy side here. So let's look to see if we can scoop for longs. And like I showed you earlier, remember the 1 hour fair value gap that we had right here, where I said, you know, we can short it to here. When I see that, that would be the target. If I was short, I would still hold it here. Yeah, Sierra chart is amazing to do that stuff. The only problem where I run into in that stuff, like I like to work from my mobile in those kind of things, in those situations. I mean, I sometimes sit in the gym and I'm able to execute these trades from my phone. And TradingView is the best platform there is in that sense. I can place any indicator on there and make it workable from my phone. And I'm on a Mac and I use an iPad. So yeah, that's the thing where I run into in that sense. Okay, so let's have a look at that FADI stuff again. So you see that fair value gap here on the hourly and on the 4 hour that we're trading into? Well, the 4 hour one is still in development, right? So, but it's clear that we are scooping up longs. The hour isn't even developed yet. So it's just basically rebalancing what we've had. So they can close this entire gap and still go up. Now let's look for reversal setups from here. I'm going to turn this off, and we're going to look for inversion fair value gaps that get accepted back into as longs. There's one little tiny one here, and I don't see one here, but this is a 15-second chart. So we're not done to go up yet. Let's wait for a sweep to occur. See if they make a double bottom from this. This is an order block right here. It's a breakaway gap also from here, by the way. See if they retest that. We're still in that algo time, macro time. Power hour starts in 5 minutes. Another tool I use is the narrator. It's a paid thing, and it basically looks for discounts and premiums on the day and on whatever you decide to use the tool for. You can do it every 4 hours, you can do it every hour, you can do it every 15 minutes. And it will trade or highlight the inefficiencies that you have on your chart for you and tell you exactly where your discount and premium zones are, where we are at right now. So on the day, you can see this dotted line right here. Anything above here is premium. Okay, so from here to here is premium, and from here to here is discount. Let's make this blue or green, whatever, doesn't matter. Okay, so we're still in the premium, but that doesn't really matter at the moment, I think. We'll see. See how it unfolds. I would love to be short anyways. So like I told you, I have targets lower that I want to work towards too, and that's this. I don't like initiating longs from here. Well, let's wait to see if we can get a displacement and a fair value gap, but where we can short from. But for now, the trend is still up, and we still need to take out this high right here. Like I told you before, what do we want to see for a reversal to occur? Is that middle finger. And we don't have that. So these are equal highs where we will continue to target. And that's what I like most. But I told you before, like, you know, be very careful. I was seeing the type of behavior that was happening right here, where I said, we're done going up for now. So that is why I ejected those longs. Sure, it can go up further. It can, but it's not worth the risk. Choose your battles. Make sure you're on the right side of the spectrum, of the curve, you know? Right now, we're in the sell side of the curve. Buy side of the curve is in discounts. So only look for longs from here. Sure, you can scalp it, but trade it into a premium. That's it, and get out. Grab your money and run. All right, let's see. Anyone else have any questions? Another thing what I found out and what my husband has been doing is using the triggers and overlaying them on fair value gaps. And if you need an extra aid for it, since you guys are pro traders and you have access to them, use them, you know? There's nothing wrong with that. Like you can see the 30-minute trigger right here is at a rebalance something that has not been rebalanced. You hear Cap saying, "Hey, listen, look for discount." When you see something happening in discounts or in premiums, look for these triggers to align with these fair value gaps. Use them as an aid. Use them to your advantage. And you can fine tune your entries beforehand, because a lot of times either a trigger will catch up to a fair value gap that is presented there. And keep that in mind. So like he always says, you buy your hourly and you buy your 30-minute. And in this case, where is the discount? The hourly isn't a discount. So, if you really feel the need to long, just wait. Set your alert. It's very simple. In TradingView, add an alert here. Go to price, crossing, select the triggers, and put your 30-minute trigger here and see once per bar and say, alert, 30-minute trigger. Okay, 30-minute trigger. Okay, and then you create the alert. Let's do a thunder this time. Okay, create it. We'll see what happens. Well, there's going to be a lot of thunder when it chops around like this, but it's still, what confluences do you have? I have mine set for the 1 hour one also. And that load that happened this morning, look, beautiful. Boom, on an hourly trigger. Okay, so do any of you use the triggers in this? Yeah. Yeah, find your way. Play around with them, Set your charts in replay. See how it reacts. Put a fair value gap indicator on your charts. Or something like that, There's plenty of them that are free. Always wait for discounts to long, especially on a day. Grab the current range, see where discount is. Only long, if you already set aside your rules that you only take longs from a discount zone, you're already on the right side of the spectrum. Okay, so we're taking out all these stops right now for these people that are long. Honestly, I do think we're going to continue upward at some point, but like I said, it's the final hour. Power hour is just starting now. However, I'm already seeing that any move down is a fake move. And the reason is because they're creating these gaps already, which is telling me already how things are going to work out. So what I'm going to do is go to an hourly chart at the moment. And I'm going to see if we're going to if we have a lower opening on the hourly. And we did. Okay, so this is the power hour open. And did we take out the stops from here? No, we didn't. So we're going to continue to look for longs. Simple as that. And we have plenty of time to be doing that. So we'll put it on the 5-minute chart and look for imbalances that are left behind. We only have 2 of them left, right there, and this one right here. Okay. And now we wait. See how they're flushing it down right now? They're in a hurry to get down. I don't like buying Fridays into the close at all, but let's say if you do wanted to take it, put on some risk here on this side here, what you could do is, let's see what we can find here, long position. Is this a 1, 2, 3 candle? Not really. I'll be careful a little bit on this.
Attention.
We just reached a discount. This is the bullish manipulation leg. So, like I said before, we have an opening. We're taking out the stops. How do we, let's just have a look to see what we would look or want a 1 hour candle in the final hour to look like. It's going to look an opening, a manipulation leg down, moving up, and close up here. What would a bearish candle look like? Typically, you would look to have something like this, a manipulation leg up, and down, and a close, okay? So this is the difference. Now we traded right into that fair value gap. We were trading into a discount. Hold on 1 second. So for me, I'm scalping this stuff real quickly as I'm speaking to you guys as well. But, you know, and this is how I do it. I posted a picture in the thing. Have you found any time-based volatility tools that consistently work? No. Look, you're seeing live what I'm doing here right now. There's just like you can slap on all these indicators, but it's going to cloud and create a lot of noise everywhere, right? I just know, like when we have these inefficiencies, that I can scalp off of them, right? So I'm already in my head knowing that, hey, I have an optimal trade entry here. Visually, I don't need to draw all this stuff because I know approximately where it's at, right? Does that mean that we're going to continue up? I don't know. But what I do know is that, like, from here, we're going to go back to a premium. Whatever this move was, we're going to go retrace back to half of what it was before we continue down. Especially when you have a big move like that, like a displacement candle in that sense, you go from internal to external, from external back to internal. You're basically looking for market maker buy models and sell models, constantly repeating. So it would look like something like this. Okay, so this is from my handbook that I make myself, and I keep looking for these type of setups. You know, I have my rules that I stick to it. I program them in my brain, and I keep doing the same damn thing over and over and over again. And tools, they create noise. I've got like the coolest tools I can show you, but like you can slap them on and they'll be like Chinese for you. You need to know how to handle them. And that's something for later that we'll get into. But I think it's first important to understand for everyone to understand how to read the price action naked without having anything on there. And the only thing you need to do is know which fair value gaps to differentiate from and know where your premium and discounts is or are for in the now. Because we could care less where we end up in 2 hours from now. You know, it's the next hour that counts. If you're unable to understand what's going to happen in the next hour, how in fuck's name are you going to understand what's going to happen in the next day? Because you get whipped across and slapped around. And the good part about this is that you can be wrong, because like you've already limited yourself in entering into trades at places where everyone else thinks or is opening puts, right? So like even now, if I get stopped out of my trade, it's fine. I'm already up in it. You know, I paid for my stop, and then I raised my stop to break even, and it's perfectly fine. Sure, could I have shorted it? Yeah, but you know, most likely, if you look very closely here, you can see that we wicked down to it, and we traded back into a premium very quickly. And the trade is still valid. Like, technically, I would need to have my stop right here. Your entry is here, on this fair value gap right here. Okay, so in theory, like even this trade, okay, sure, it fell short a tick. That's fine. But like I told you, I get out before that. You know, there's no need to hold for that in that sense. Now, let's go to a 1 minute chart, and most likely you will see an optimal trade entry here in that sense, just on that little swing, you know? So it keeps repeating. And you get a fair value gap that gets presented to you, and that's why I use those lower time frames. So you see how we're getting an optimal trade entry on the midnight open here, and there's your confluences. Like if you're aggressive, you just add, and your stop is right here, okay? So if you don't have to put your stop here, you can raise your stop right now to this, and add here, target here, and continue, you know, hitting that back. Let me make the, okay, this is a little bit better. I think visually you'll be able to see it much better. So this is your optimal trade entry box, your primary target. OTE text black. Yeah, this is what it should be. Let me take everything off so you can just see what I'm talking about. Take this fair value gap off. It's a 5 minute, you know where it is, so we don't need to have all that noise on our charts. And the macro was done. You see that, how they made that low within that macro, right? And even on this, you know, I might get stopped out of my long, which is fine, but I'm skilled. Okay, I'm out of it. I'll show you what that looks like, how I got stopped out, because I left the stop at break even. Here you go. Technically, I would have needed leave the stop right here, because what they can also do in these setups a lot of times, but I'm aware of what it could do is like take out these lows right here and then make the move, create the trap. So there are 3 models that can emerge from this, right? So, but then again, you know, it could also be a continuation move. I'm kind of trading what my bias is. Like I said, the higher time frame bias for me is not too long from here anymore. Anything that I'm doing is scalping. Like I said before, what I really want is them to trade to here. And it will not do it in one shot. It will do it like a drunken man. But as long as we're not getting like big market structure shifts, still hitting that back. Let's see. Let's see. Any questions? And this is a probability game. You need to be right more than you need to be wrong. And if you already manage to isolate yourself in initiating positions at the right moments, you have room for error, and you can be wrong. the important thing is that you end the green, or you end the day green. Okay, well, today was a very challenging day for me. I don't even know if I should disclose how deep in the red I was, but I recovered it quite a bit. I think I was down at one point like 39K, and now I'm green on the day. And that's one stupid mistake of leaving a stop in place, or actually a profit target, which I didn't cancel out. Trading partner using triggers, which tends to be a trending strats. While much of your techniques go off mean reversions, where do you find the two aligning? I look for triggers to align in fair value gaps. So, like this 30-minute trigger here, let's put on those Fadi candles to see if we have any alignments of higher time frame fair value gaps that have been confirmed. No. But on the 4-hour, could it be, let me see if I can find you an example. So for shorts, okay, we have a 5-minute bearish fair value gap right here, right? See that one here? If we wanted to short, you don't short it until here. So you wait for this candle to trade back into the zone. However, like I said before, like I'm seeing already like a lower opening here. My bias is up, which was the reason why I was long. And I kept my stop at break even, which I got stopped out. But technically, like I told you before, if I would have left my stop here, where it should be, I would have still been in the trade. Okay. Hoe gebruik jij de triggers? I'm asking real quick to see if he has any tips on how to use those triggers.
Alignment with fair value gaps. They act as support and resistance sometimes, but it matters how steep the angle of attack is from the triggers.
Okay.
So if there's momentum behind the trigger, of course the daily, the hourly are stronger than the 1 and the 5.
Okay.
They're stronger in momentum.
Yeah. And what do you do when they cross?
You have some bullish crossings and bearish crossings, especially with the 1 minute and the 5 minute. If they're crossing each other, bullish or bearish.
Okay, so in this case, when the 1 minute
this is a bearish
cross,
so that means you're up for down.
Okay, so will you be looking for 5 minute fair value gaps to short from?
Exactly. Yeah.
Okay. So now, if you can look on your chart, you can see the 5 minute trigger is aligned with a 5 minute fair value gap.
Yeah, so basically,
so this is a 5 minute bearish fair value gap that we have right here, and we have a 5 minute trigger right below it.
Yeah, but you also have the 30-minute trigger underneath you.
Okay.
And especially because of the market is very bullish, I have the tendency to go long here.
To trade into that bearish fair value gap.
Yeah. And even when we have a bearish crossing on 1 minute, in the 5, it's like, there's not that much momentum to go down. It's also the end of the time of day, of course. It's power hour.
And the draw liquidity is up.
Yeah.
Okay.
But I still have my stop closed because actually, I wanted to. I think it's slowly to go up. I expected more.
You think it's? Oh, you're expecting more momentum for it to go up.
Yeah,
in this case.
so it's a little bit hesitating. So
It's stalling. Yes,
it's stalling.
but that's typical for a Friday.
Yeah.
That's something that you should not expect anything on a Friday.
That is why I'm a little bit hesitating about this long right now.
Yeah, I understand that.
Should have gone up already.
All right. Let's have a look on ES. See if we see alignments on there. I don't trade ES that often. I will start paying attention more to it as soon as we start getting acceptance back into the ranges. However, I do like how we're getting this reversal, and these are the type of displacements that I love seeing on the 5-minute chart. We haven't managed to test the inversion fair value gaps yet in that sense, but we should be able to get it into the close maybe. But like honestly, I would if they close at the highs after the close, I would not mind considering taking a short position overnight. But you know, like again, it's very difficult to pick a top, and you really need to be able to manage your risk properly in that sense. And for us to be able to swing trade a short for longer term, you really want to see daily closes underneath a previous low, and like with the displacement and a fair value gap that would trade back into a premium at that time and find an optimal trade entry into it. And it's messy sometimes, you know, it's really, shorting is the most difficult thing to do, honestly. You're better off buying, especially in these last 2 years. You know, they're short-lived. I don't know, maybe they call them short because they're short-lived. But
bull market for ages now.
Yeah, we've been, you know, the charts go to the right and not only right. So that's how it works.
You see how it's failing?
Yeah, yeah. That's why I was favoring the short side on this as well. And like even for the accumulation part, smart money starts accumulating them, even though they continue to go up, but it just gives them an extra opportunity to offer them a premium where they can accumulate the shorts for a longer swing. Okay, so yeah, and NASDAQ right now is about neutral on the day, by the way, but still above the previous all-time high. So I'm very curious if they're going to be closing above it. You're going to see on the higher time frame if this is going to be a reversal on top of the all-time highs. Honestly, I do think it is, but we shall see. I would really love to accumulate some shorts and hold them for next week. Recovering a little bit. See if you can get some more premium later on. Hopefully they'll take out the equal highs that we have on top at 236 that I see on NASDAQ. You know, this is like the McDonald's M thing that we're seeing right now. So I love that pattern, just the fading away. But I covered, but I would love to see them push it up one more time. Like that. Take out these guys right here. Let's see. All right. Any questions? Everything covered, I think. Never long on a Friday. No. Never, ever, 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 ever do that. The one time it does happen, it's fine. You'll get stopped out. That's fine. But you're better off shorting that shit. And I'm sure they'll pump it in the last 10 minutes. But in that first 30 minutes, that manipulation leg down on that hourly, don't do it. It's not worth it. Even these pumps right here, right? Yeah, sure. You can scalp them the way I've been doing it. And the trade is still valid that I pointed out to you. But like I said, you really want to limit yourself on specific times and specific setups on specific days. Like, don't open up a short here unless you are just only taking out liquidity either, because like we're in an intermediate discount here. But just be very careful in selecting what you do. Do you ever do OTE trade entries before 1550? What do you mean? I do OTE entries constantly. Like, I look at swings. Like, look, this is also an OTE, huh? This short right here. So you look for alignments. So I draw these small little OTEs right here. Yeah, I do that. Is that what you mean here? Because this is an OTE short, this little box. So when you have alignment with an OTE here, yeah, I take that. This was the short. Oh, zero DTE, sorry. Zero dates. Do I ever take those entries before 1550? Not on a Friday. No, I don't do that a lot of times. Sometimes it depends on the setup. Like, I could do it now. Definitely, I would try it if I really know that we're going to be closing up at the highs. But it's for scalping, That's the thing. Look, for example, let's pull up the chain right now in SPX, and I'll just open up SPX here on the chart. So we'll have a target where I do. See, so 6,000 was my psychological target where we could work towards soon. Okay, so we have this gap right here at the moment. So this is already a target where I will work towards to, and that is 6005. So let's have a look on the 0 dates right now to see what 6005s are trading at and what those premiums are, and if I see enough potential upsides to get there. So they're trading $2. I'll just enter one right now. So I have 170. I'll just enter one. See what it's. Is it a buy?
No, yeah, inverted.
Oh, okay. Yeah, I got in. Let me have a look real quick. Okay, so what I do, I chart the option charts always, right? And I just wait for them to get to $1. And if I can see they can trade them back up to 250 or something like that. Have a look. Oh, they're dumping it down. So, okay. I wouldn't feel comfortable doing this. Taking this one. Let's see if we have a 5-minute fair value gap where you can take a short from to trade towards 2. Yeah, we got one here. Yeah, 6005 still. This one's untested. This is a reversal. Yeah, that's the thing. Market structure shift right here. Nah, I'll be careful taking it. Don't take it.
Friday.
It's Friday. And if you were going to take them, set your alert on this high right here. You can take it. I don't know which one you should take. You could take maybe the 6005 call. You have to look to see if I buy a few of those motherfuckers. And then we set the alert here. See how it turns out. They're now trading 125, 145. They were trading 110 here. Best thing to do is wait for the sweep to occur. And see if they're trading like 75 cents or something like that. And, you know, buy like 10 or something like that. Send an order in. Let me see, how many do we have here? 8, order 10, update. And wait for the 50 algo to sweep all these guys out. We have a breakaway gap right here that has been tested already, but let's wait for this low to be taken. Because basically all we're doing right now is trading into this fair value gap right here. But I don't want to see any body closures underneath it. So let's see. I'm putting on some risk here. A bottom for a buck. Risk I'm willing to take, but also know that it can go against me. I'm not counting that money as anything as a gain. I will leave that into the close. Let's see, 8. Take our 8 off here at 130. I don't see them buying either at the moment, so I'd be very careful. On the lower time frame, you can look for market structure shifts. Put it on the 15-second chart. As soon as you see it breaking above this right here, with a body close above, preferably with a fair value gap overlapping the previous high, you can enter it. I'm going to take this off. It would be nice if they dump it still. How's NASDAQ doing? Okay.
Attention.
Ooh, thunder. "30-minute trigger is being hit now on NASDAQ. Let's see if I can scoop along on NASDAQ quickly as a scalp. They already took out those highs. I'm scooping up some longs on NASDAQ here, but I'm already scaling out. The imbalance right there, right? Yeah. I think we're going to hit it now.
It's a safety.
Yeah, safety is fine. So what I see, we got the alert on the 30-minute. I added. All I'm targeting are these things right here, these imbalances right here. And I look for other inefficiencies that could be touched. Now we have a 1-minute trigger that we can work with, leaving that on, but it doesn't really matter to me. I see these little imbalances where I know they will send a candle to get rebalanced from, even if they were going to go down. So that's fine.
Hier ook 2.
Ja, dus ik heb hier 1, 2.
Ja.
Die. En ik heb nog 1. I still have 1 runner left, which is fine.
Ja, 2 imbalances. Pak die even en door.
Ja, door hè? Oh, die onder. Je bedoelt voor de long. Ja.
Ja,
Maar dat is prima. Ik moet kijken of er boven nog eentje is. Ik zal die celstop erin zetten. That's fine. Okay, even kijken naar SPX to see if we can get a market structure shift here. Oh. So what is important to see is like when you see a swing high, like I pointed it out here, you really want to see like bodies above it. Now I move the low post to here. I can fine tune it by doing it here on this wick right here. But what you want to see is like them really create a thing like that over it for a value gap where you would see price trade back and then trade back up. Boom, like that. Oké, ik ga nog even eentje toevoegen hier. Dan kan ik hem rollen. Ik wil nog die long vast blijven houden, in ieder geval nog tot die equal highs daarboven. Maar het probleem is dat ik weet dat ze hem ook naar beneden kunnen houden. Dus ik pak deze wel. Maar ik zet wel mijn exit op de close van yesterday. En dat is 237. All right. Anyone have any further questions you want like me to cover? Yeah, Addy, it was a nice short setup. However, I am scalping long from here. On NASDAQ, we've been touching the 30-minute trigger right now. So I added like 4 or 5 contracts, offloaded them, and just added a few more again. But let me be clear, it's just a scalp, only to the close. It's not like I'm aiming for a thing. If they give me anything more, it's fine. And I'm also aware that they could continue to flush it at 50 and just dump it down hard. But it's a calculated risk for me. It's fine. Greed. You bought discounts, you mean? Or did you long in premiums? En ik haat die calls kopen eigenlijk ook. Die fucking premies die zijn altijd zo. I'm telling my partner how much I hate trading options in buying premiums. John is teaching me how to do it in selling them. That's good. I haven't been doing it for the past few weeks, unfortunately. But yeah, you know, the theta part is just something that I just can't get my head over. You know, I just don't. I don't see it any advantages to it in that sense, except for earning quick money and using that you have to have less capital to earn money from it. But then again, you know, the selling part is much better. I always see them going down in premium with price going up. So I will spend some more time again to that next week. Now that we've got all this crap out of the way, should be a little bit easier to sell puts and those kind of things. Moet ik hem maar gewoon laten gaan?
Ja.
Ja.
Goeie voor 10.
Ja, nee, maar dat maakt niet uit. Dat is met €2000. Of dollar. En die andere die zijn... Deze trade die betaalt al nu al voor deze premie.
Ja, maar dat is wel veel.
Ja.
20 minuten, kom op. Maar dan moeten we wel eens goed doen.
Yeah, man, they can just park it here and be fine with it. And I want to be short, big time, from a little higher for a swing. But it looks to be on a buy side curve. Boom. And it will be violent. I'm going to take off the triggers. It's confusing. Are we actually closing above the previous all-time high? Okay. Yes, we are. Okay. So for next week, what we're going to be doing, I'm going to take everything off the charts, clean charts. So we got our job done. We took out the buy side. Okay. So now we're going to be trading back into discount next week. What will happen is that we're going to be having a fair value gap being created here on the daily chart. Like that. Let's go into the weekly, still in development. So what we can expect for next week is them trading into this fair value gap And we're going to be looking for longs like this. And yeah, to trade where to, I have no fucking clue, but maybe take out this. Now, if they open next week and they take out this first, this buy side first, then we're going to be looking for shorts on Tuesday. And this is the sell side. So we would love to see them do this manipulation leg down, trade into this, and to do a continuation move up. What time is it? 44. Let's roll these suckers up. 11 November.
Opening order filled. Opening order filled. Order cancelled. Order cancelled. Order cancelled.
Hebben we nog later?
Nee. Zo even.
Zie.
En gewoon. Ja.
Wat zei je?
En nog een lijn.
Ja.
Oh.
Okay. I'm reading your story now, Eddie, what you're explaining. I just wanted to cover a little thing in regards to those sessions. Hold on 1 second. For golden, for example, okay. Well, it's identified here as London close. For me, it doesn't start until 11. What I like to do a lot of times is in that golden nugget window is you just wait for either a New York session, either AM or London session high or low to be taken. And in this case here, you guys know that usually these highs and these lows, they run until 11 a.m. for me. Hold on one second.
Hé man, ik ben je zo even terug, is dat goed? Ik ben nog even les aan het geven. Doei.
Okay, so we wait for these highs to be taken. Let me just change this real quick because it's 11 a.m. Well, 11 is when the kill zone ends of New York AM, sorry. So it starts at 8:30 to 11. This is the New York. We'll take the London close off because the London close, this is going to be named the golden nugget. We'll just wait here. Okay, so you wait for that macro to show up and take out either the New York high or low and take the opposition. And the only thing your job is to trade to the medium of whatever the New York AM session is, to trade it back into discount and align yourself with the higher time frame. Because if you look here, this is going to be the mid of it. What's that? 30-minute trigger being touched again, I think. Okay, anyways. So this is your mid. And you look for it to trade back into sort of like a discount in that sense, or a fair value gap, whichever is presented. And what time did the RTH open up? I think you could look at the 9:30 opening. Yeah, it's best to look at the 9:30. Don't do the 8:30 because it will give you false readings sometimes. So yeah, like this. So if you look at this high from this low right here, from 9:30 until 11, you can see the short that you can take after taking out the buy side. All that we're doing is going back to the mid and how they kiss that. And that is your long for the rest of the day. A London session runs from 2 a.m. to 5 a.m. This shit here, it sucks. It doesn't happen often that it does that. Okay, so this is out of the ordinary, this move here. But technically, they did what they did is they accumulated short above the midnight open technically, and then wanted to dump it down, distribute it, and basically they did the same thing here. You have to look real quick how our longs are doing. Macro, what did they do? They flushed it down to where again? Take out those tops. See that? Exactly at 50. To do what? To trade back up. So it was all a trap. Let me take all this crap off again, so we'll just watch the clean chart with price action. Taking out the sell side first. See that? Boom. Little dirty wick here. Can you see that? See it down in 15 seconds. It's really nasty stuff. We don't like that stuff. Anyways, I don't know how far it'll go, but I might be closing out my longs soon. I think I'm gonna get stopped out. Boom. One last push, please.
Hoe gaat het met je...
Oh, de calls? Nee, die zijn niks meer waard. Die gaan ook niks meer waard zijn. It's not going to be an easy ride, but we should be going towards this buy side right here.
Closing order filled.
So, well, that's what I was aiming for, and I'm offloading them. Not expecting much from it, but
Closing order filled. Closing order filled.
a few more. See if we can get that filled. No. The gap down.
Closing order filled.
Still have 2 runners left, but I'm gonna take
Closing
them out.
order.
I don't like the price action how they're
Order
doing that,
cancelled.
so leaving that out. Ejecting. If they take out this low again, I'll look to re-enter in the last minute, but they're selling on the way up. So you can see that in the type of behavior this is. So this is not the type of price action you would typically want to see in a bullish state. So it looks like they are offloading into people holding the bag, which would align up with what my thesis is, to trade into that daily fair value gap next week, into this here to go up. We'll see. If I get an entry short higher, I will consider taking that. Prefer that from here in this zone. And I would draw those OTEs here as well, right? The thing is that like I'm not willing to take on the risk because they can just flush it down really quickly. It's not worth it. You can just type in anything, sessions or kill zone indicator. Like the one I use is different. It's the one from, I customized mine completely. So yeah, let's see. Well, I have my own one, so, but like, I think you can find any, there's tons of them. Just figure out, make sure you have the times right. That's the important part. That you have the opening and the closing times of the sessions properly. And I think the best one to use is from, let me have a look. I don't know, I'll post it in the Discord. I need to look it up in, let me see. No, I have to look it up for you guys. I'll post it into the Discord, but there's one that gives you the alerts where you're able to set the alerts when it breaks above sessions as well. But like I do them manually anyway, you know. And the only reason why I put these indicators on are really for you guys, to make it a little easier. So, all right. Hope you all have a great weekend. Enjoy. Do not do crazy things. And yeah, I think I outlined the plan, what I expect for next week anyways. Look for it to trade back into discounts. Continue buying dips when you get a chance. And, you know, I'm not saying
Opening order filled.
I might be opening up a swing short position from
Opening
here
order filled.
for next week and to trade it back into discount. Not expecting much from it, but it's a longer term thing. All right, guys. Have a good weekend, and I'll speak to you next week.